We're talking about a stable coin made by the government, US government, and central banks. So, President Joe Biden signed an executive order on cryptocurrency, making the first concrete steps by the White House to regulate digital currency. The executive order outlines what government agencies, including the Treasury Department, need to do to develop policies and regulations on cryptocurrencies. It also calls on US agencies to make sure the country's cryptocurrency laws align with those of US allies and tasks the Financial Stability Oversight Council to investigate any illicit financial concerns. Additionally, the order puts new urgency on the possibility of a new government issued central bank digital currency. Several US banks are joining together to offer their own stablecoin, which they'll call the USDF. According to a press release, founding members of this new stablecoin include the New York Community Bank, First Bank, and Sterling Nation Bank. All FDIC insured institutions. USDF is an alternative to non-bank issued stablecoins such as Tether and will be minted exclusively by US banks. According to the release, USDF addresses the consumer protection and regulatory concerns of non-bank issued stablecoins and offers a more secure option for transacting on blockchain. What are your thoughts on US banks creating their own stablecoins? Do you feel it was inevitable, and do you think most people will move away from using, the previous stablecoins like Tether, or they will move towards using these, or that it will directly take away from the birth of crypto as a decentralized asset?
Well, we all heard the same statement again, right? Protection. We want to protect you. And my opinion is always quite short regarding CBDCs, any central bank digital currencies. Of course, they're centralized and they're no better and sometimes even worse than fiat currencies. Of course, we have a larger centralization. And on top of that, CBDCs will allow a larger transparency and easier way to track every single transaction. And we know that US government just recently introduced a new regulation where all payments over, I believe, $600 should be submitted to a bank. So they want to know like what the $600 were paid for. And CBDCs, or in this case, USDF, will allow them to trace every single transaction and get the complete transparency and lots of individual data on, again, individual transactions. They will know when you're going to a bar, how much you're spending, how often are you going to a bar, what kind of groceries you're buying, what kind of people you're transacting to, who you're lending money, who you're borrowing money from. They will know all this information with CBDCs, and they don't need you to submit any reports. They will get this information right away in a moment because of our blockchain technology. And now we're all realizing that CBDCs are trying to replace fiat, make it more efficient for government and corporations. And I cannot say that CBDCs are bad, right? They bring so much benefits to our banking. They bring so much benefits to corporates, or they bring so much benefits to the government because they optimize transactions. And I already told that now, like banking transactions with our normal fiat currencies take a few days to arrive. It's a very long time that's harmful for a business. And of course, our CBDCs are making this process way easier. So it's totally makes sense for all corporations, government structures to start using it. But the one aspect that I'm concerned about is the privacy and decentralization. And that's not the case with our CBDCs. Of course, that will be an instrument that will remove your privacy and will not be at its definition decentralized. It's a centralized, and even the name says central bank digital currency. It is a centralized instrument. So yeah, I will leave it to you to connect the dots and make your own opinion I already listed the benefits for some institutions, and I listed the risks for just individuals.